Over the last 10 years, this Bluechip stock has been a crazy compounding machine. And when I say crazy, I mean it. This stock has compounded at a CAGR of 58% in last 10 years. Basically, this stock has generated 100 times return in last 10 years. And that made this stock one of the biggest wealth compounder in last decade. Can you guess the name? Okay, let me give you one more hint. This stock is from financial sector with market cap of more than 3.5 lakh crore rupees. Well, I am talking about Bajaj Finance, the largest NBFC in India. In fact, this NBFC has a market cap of more than that of the top private banks like Axis and Kotak. Hey everyone, my name is Sahil and this is my Personal Finance Academy. Over the last 10-15 years, Bajaj Finance has been a money-making machine for its investors. Its share price was just Rs 80-85 10 years ago in May 2012. And from there, Bajaj Finance has touched a peak of Rs 8,000, generating almost 100 times return for its shareholders. Although from the peak, the stock has corrected almost 25% to current levels of Rs 6,000 in this recent market correction. But Bajaj Finance is one stock that has always commanded a premium valuation. In fact, even after 25% correction in the stock price, it is still trading at a price to book value of 8.34 and price to earning of 52, which is much higher than its competitors. The question is why? Why Bajaj Finance always command a premium valuation? And is it worth investing in Bajaj Finance at current levels? Because 100x return in the past is gone. The question is, if you invest today, can you get at least 10x return in the next 10 years if not 100 times? So that triggered the thought for creating a video on Bajaj Finance. By the way, how many of you hold Bajaj Finance in your portfolio and at what levels? Let me know in the comments. So in this video, I have discussed the future plans of Bajaj Finance and why it is one of the most favorite stock of many investors and why investors are willing to pay a premium for it. But before that, I will first discuss the journey of Bajaj Finance and then I'll cover the Bajaj Group structure and then I will cover the reason why it commands a premium. By the way, this video is only for long-term investors. If you want to learn more about stock fundamental analysis, you can explore my complete course on money management. Alright, let's get started. If you look at the journey of Bajaj Finance, it was actually formed in 2007 when Bajaj Auto demerged itself to focus on financial service business. Although its roots dates back to 1987 when Bajaj Auto started its auto financing business. At that time, it was mainly into the financing of two-wheelers and three-wheelers. So the entire idea behind the demerger was to unlock the value in the high-growth business area of auto, finance, insurance, etc. So Bajaj Auto would only focus on its automobile business and it created Bajaj Finserv and Bajaj Finance to focus on financial services. Now it gets really confusing as in what is the difference between Bajaj Finance and Bajaj Finserv? Okay, let me explain this. In simple language, Bajaj Finance is the subsidiary of Bajaj Finserv that takes care of the lending business. So basically Bajaj Finance provides loans to consumers like your personal loan, two-wheeler, three-wheeler loan, housing loan, etc. It also provides loan to small and medium enterprises as well as rural lending. And Bajaj Finserv takes care of all financial services including your lending, insurance, AMC, etc. Let me show you the Bajaj Group structure. So this is basically the Bajaj Group structure. You can see on top you have got Bajaj Holding and Investment Limited, which is also a listed entity that holds 39.16% shareholding in Bajaj Finserv and 33.43% shareholding in Bajaj Auto. Then Bajaj Finserv has got so many subsidiaries. On top you have got Bajaj Finance. So Bajaj Finserv has 52.49% shareholding in Bajaj Finance. And it has got 74% shareholding in Bajaj Allianz Life Insurance, 74% shareholding in Bajaj Allianz General Insurance, 80.13% shareholding in Bajaj Finserv Direct Limited and 100% shareholding in Bajaj Finserv Health Limited. Again, it has got 100% shareholding in Bajaj Finserv Mutual Fund, 100% shareholding in Bajaj Finserv Asset Management and 100% shareholding in Bajaj Finserv Venture Limited. So basically Bajaj Finserv is a big entity that holds all these insurance, mutual fund, AMCs and all of that. Now Bajaj Finance has also got two subsidiaries, 100% subsidiaries, Bajaj Housing Finance and another is Bajaj Financial Security. I hope this is a pretty clear picture of Bajaj Group structure. You have got Bajaj Holding on top that holds 39.13% in Bajaj Finserv and 33.43% in Bajaj Auto. Bajaj Finserv again holds 52.49% in Bajaj Finance. So it is the parent company of Bajaj Finance. Bajaj Finance also has housing finance and financial securities, and Bajaj Finserv has got all the life insurance, your general insurance and AMCs and all of that. If you look at the AUM growth of Bajaj Finance, look at this growth in AUM. In FY18 it was 2,478, and from there it has increased at an exponential rate, and currently it is 1.97 lakh crore in FY22, and this growth is 37% CAGR growth. That's an exceptional CAGR growth in the AUM of Bajaj Finance. Next, if you look at the net interest income, again it has been an exceptional growth. The net interest income has grown from 332 crore in FY18 to 21,892 crore by FY22. Again there has been a consistent growth at an exponential rate in the net interest income, and a CAGR growth is around 35%. And then if you look at the profit after tax, look at this. It was 21 crore in FY08, then 34, 89, 247, 406, 591, 709, and consistently it has grown to levels of 7,028 crore by FY22. There was only 1 year where the profit dipped to 4,420 crore in FY21, which is because of COVID. But apart from this, it has grown at a CAGR of 51%. That's an exceptional growth in PAT. There are hardly any companies that have grown at a CAGR of 51% in last 15 years. No wonder investors have rewarded Bajaj Finance share price, and it has grown 100 times in last 12 years. Next, if you look at the return on equity, which is again a very important parameter in financial sector, its return on equity sharply jumped to levels of 19.7% in FY11, and since then it has been consistently above 20%. There was a slight dip of 12.8% during FY21 because of COVID, but again it is back on track with 17.4% return on equity, and trust me, this is fantastic return on equity for a financial company. And finally, if you look at the net NPA, look at the sharp fall. So obviously this was the time of housing bubble burst where the financial companies NPA shoot up to roof, and then from there it has fallen down, and look at this, in last 10-12 years it is well under control, and currently it is 0.68% in FY22, which is well under control. So basically the financials of Bajaj Finance in last 15 years have been exceptional, and because of that it has grown 100 times in last 10-12 years. So as far as financials are concerned, Bajaj Finance had a crazy growth in last 15 years, and that has been reflected in its share price that jumped almost 100 times in the last 10 years, making it one of the biggest multi-bagger in last 10 years. But the key question is, can Bajaj Finance continue to grow at an exceptional rate for the next 10 years? Well, as far as its share price is concerned, it currently commands a PE ratio of 52 and its PB ratio is 8.34, which is much higher than its peers in the financial sector. For example, ICICI Bank commands a PE ratio of 20 and PB ratio of 3.25. HDFC Bank also has PE ratio of 20 and PB ratio of 3.5. Kotak Bank commands a P ratio of 31 and PB ratio of 4.4. Although these are all banks and Bajaj Finance is an NBFC, but clearly investors are willing to pay a premium to Bajaj Finance. But the question is why? Hence I did some research and tried to identify why Bajaj Finance command a premium valuation. There is no doubt that Bajaj Finance is the leader in NBFC sector in India. It is part of Bajaj Group, which is one of the oldest and most respected business group in India. Moreover, Bajaj Finance has a very diversified balance sheet with 32% lending from consumer, 10% from rural, 13% from SME, 14% from commercial and 31% from mortgages. It also has a strong focus on cross-selling its products. But the key reason why Bajaj Finance commands a premium is due to its huge focus on digitization and plan to become a one-click financial supermarket with a super app providing both shopping and e-commerce ecosystem. The plan is to provide 30 services in one app across financial services, travel, entertainment, food, utility and shopping. So basically you can shop, and when you need money, then you can also get the financing on the same platform. Well, that's really smart. Bajaj Finance has also entered into the UPI payment space with its own payment service Bajaj Pay. So it would compete with the likes of Google Pay, Amazon Pay, Phone Pay, etc. It has also launched its no-cost EMI card to ride the buy now and pay later wave. Company has also launched its digital wallet to compete with companies like Paytm. In fact, Bajaj Finance has also launched its marketplace for insurance and investment with partnership with Bajaj Finance. So basically an e-commerce company for finance and investment where you can compare, review and buy various insurance policy or invest in FDs, mutual fund, etc. Although so far there are limited partners and majority of offering is from Bajaj financial ecosystem. But overall, the idea is to compete with new age fintech marketplaces like your Policy Bazaar, Paisa Bazaar, etc. But here, the key difference is that Bajaj Finance and Bajaj Finserv do not have just the marketplace like your Policy Bazaar and Paisa Bazaar. They also have their own products and services. All this digital ecosystem is getting built in a phased manner where phase 1 is live with its insurance and investment marketplace. Then in phase 2, the company plans to offer a consistent experience across its web and app. So customers can start their journey on one platform and complete it on another platform. In addition, Bajaj Finance continues to expand its digital presence across geography and continue to add new merchants as well as consumers on its digital platform. In FY23, company also has planned to launch peer-to-peer lending, which is also getting very popular. Some of the peer-to-peer lending fintech companies include Bharat Pay, Cred, etc. In short, you can say that Bajaj Finance is at war with all the new age fintech companies, and since it is already has got an experience of 35 years with an unparalleled leadership in NBFC sector, Bajaj Finance is poised to grow in the next 10-15 years. In the latest investor presentation, Bajaj Finance has given long-term financial guidance where it plans to grow its AUM by 25 to 27%, profit growth by 23 to 24%, return on equity between 19 to 21%, and reducing the net NPA to levels of 0.4 to 0.7%, and that's basically year on year. And these are crazy growth numbers. No wonder why investors are willing to pay a premium to Bajaj Finance. Because if Bajaj Finance can achieve these numbers on a consistent basis in the next 10 years, then it will become 10x. Now the only question is, can Bajaj Finance really achieve these numbers? Of course, it won't be a cakewalk. Considering the fact that after IL&FS and DHFL debacle, now RBI is more stricter with its regulation, and the fact that Bajaj Finance would have to grow as well as control its NPA. So in this video, we discussed the future plans of Bajaj Finance and why it commands a premium over its competitors. Bajaj Finance is transforming itself into a one-stop financial supermarket and looking to capture the high-growth financial market of India. It is not just competing with large-cap banks like your ICICI, HDFC, Kotak, but it is also competing with all the new age fintech companies. Over the past 10 years, Bajaj Finance has outgrown into a huge financial company. And as far as future is concerned, management has given strong growth guidelines for the future. In the recent correction, Bajaj Finance has fallen from its peak of Rs 8,000 to levels of Rs 6,000. Still, it is commanding a high premium with a PE ratio of 52 and a PB ratio of 8.34. Now, there is no doubt that the growth potential for Bajaj Finance are immense. The only question is, should you pay such a high premium for Bajaj Finance? Well, that is always debatable. In fact, I also had a look at the latest brokerage house report on Bajaj Finance after its Q4 results, and it has been a mix of buy and sell. For example, ICICI Direct is bullish on Bajaj Finance with a target of 9,500 rupee. Motilal Oswal has given a buy rating with a target of 8,350. Whereas CLSA has downgraded its target from 6,500 to Rs 6,000. Kotak Security has given a target of 6,500. So it is a mix of buy and sell. Personally, I believe that Bajaj Finance is looking expensive at current valuation. Sure, it will grow from here, but the kind of valuation Bajaj Finance command, I find it expensive. However, if there is more correction in Bajaj Finance from current levels, then it is worth adding in systematic manner. So what do you think about Bajaj Finance? Do you hold it in your portfolio? And is it worth paying a high premium at current levels? Let me know in the comments. And if you find this analysis useful, give it a thumbs up and share it with your friends. I'll see you next video. Till then, take care.